Good morning, guys. So I've just put my recorder on just to show you what I'm about to do on GU. This is the 1 minute time frame now. For those following London Open, you can see that the market had a strong push to the upside. What I'm expecting now is a continued rally to the downside. Based on the structure of the market, we can see we've had this strong trend up. I'm sorry if I'm talking fast, but I want to get into this position. So I want to take the position once price breaks this low with a nice stop loss above this structure. So we'll work with around a 6 pip stop loss on this trade. So we'll get that set in. And we'll make sure we pop this on our live trade in here. Now, so while I'm doing this, we can see London Open, the market did push to the upside. And normally once we have that push, what you'll find is that the market will then go in the opposite direction after that push. So I'm looking to get into this sell the minute price starts to push down, which will be around in and around this level here. That's fine. So we have our first open position. We actually got filled on this position in and around 30.73.8, so 30.73.8, a little bit better than we had here. And our stop loss we have above the structure as 6 pips, okay. And our target, we're going to go for a really simple 1 to 2 on this trade, nothing major. My first trade on GJ I was able to manage a nice little bit of profit on that, 50% at 1 to 2. So with a 1 to 2 here on this position, we'll be able to close the day with a full 1 to 3 risk reward ratio. So we had a trend to the upside, right? Price was trading above this trend line for a long period of time. We can see that it was making higher highs and higher lows. Now what we see here on this market structure, this price eventually broke this structure. Now we're trading below it. Price is not able to break above these key levels here, and we're seeing price stabilizing. So more bullish pressure has stepped into the market in and around these levels. This level here, and then these levels here, and then what you'll find is that the market has failed to continue to push up. Now after these candles form, what we do expect the market to do is continue pushing up if we're going to continue this trend to the upside, and especially if we're creating some sort of support level in and around, I think it's 30.75 when I last checked it, but we wasn't able to continue that momentum up. Now we've had this break below this structure here, strong bearish candle. What we're expecting the market to do now is respect this level and continue down as a beautiful break and retest of this structure. We have our stop loss well above structure. Not sure if we really needed a 6 pip stop loss, but we have got a 6 pip stop loss in this case. That's how we've calculated it going into the position. And now, we set a sell stop entry, which we actually had to enter with an instant execution simply because we didn't have time to get that sell stop in place. So in theory, it is a sell stop. But obviously we had to hit that really quickly. As you can see, we did get a slightly better position, and now we're just going for a 1 to 2 risk reward ratio trade. So that means if I risk 1,000 here, I will be gaining 2,000, and based on a risk reward ratio, that's really good in the long run, because guess what, trading is a numbers game. I want to make sure that any investment that I make into any trade that I do, I get the best rewards from it. So over 100 trades, in theory, I should come out on top. So we're going to let this trade play out. And we'll see what happens. I'll go on mute while we watch this. Before we do, actually, I need to make sure that I get this trade to break even at 6 pips. So 6 pips is going to be in and around this level here, which lines up really nicely actually with the previous major high. So if we bounce off this level, we'll be able to secure this in at break even. So let's just make a note of that so we're aware. Very good. And yes, we'll just let this trade play out now, and we'll see what happens. We'll be back with an update very shortly. All right, everybody. So you saw that price had just recently popped down to my break-even area now. So that means I'm going to lock this trade in at risk-free. So now what we're going to be doing is just waiting to see now if we can continue to fulfill this position. We'll either see price come back and take us out at break-even, or we'll get a complete take profit on this at 1 to 2. I'm not going to consider taking off any profits on this trade. As I said, I've already taken some profits on my GJ trade this morning. So with GU, we'll just let this run as a full position. If we hit take profit, we manage to end the day with a really nice 1 to 3 risk reward ratio, meaning that if I risk 1,000, my gain for the day will be 3,000, just as an example. Or if I risk 10, I get 30 back as an example, which is a really, really good risk reward ratio. So we'll let this run out now. I'm not concerned about these wick rejections. I did mention that we may get a bounce in and around this previous high around 30.67, which you do see now. But the momentum is strong. Trend of the market is to the downside. We could suspect now that the market will continue to create that structure that represents a trend, which will be a pullback and then a continuation to the downside. So I'll be monitoring to see how price acts in and around this level here, where it's created a somewhat lower high formation. If price starts to break above it, there's really no need for us to be in this position. But because we're recording this live, we are just going to let it play out and we'll see what happens. So we'll remove everything. We'll leave the resistance in there where that lower high is formed, and we'll see what happens. We'll be back with an update when we either hit break even or we hit our take profit. So I'm just back with an update. Okay, so we're just coming towards the last 10 minutes of the hourly candle, and what you'll find will happen usually, mostly, or most commonly towards the end of the last 10 minutes candle, and sometimes 5 minutes, is that there'll be either a strong push to the upside or the downside just to complete the range of the hourly candle. Now, what we mean by that is if the hourly candle has pushed really strong to the downside, and this is the average range of this hourly candle for that period, then what you'll find is that candle will retrace just for a short period of time and leave a wick behind. Once a new hourly candle opens, what you'll then find will happen is that you'll get that continued momentum and that push to the downside, which represents that continued bearish momentum off of that last pattern behavior. Sometimes, just sometimes, if the range is pushed a lot and there's a real reason, more likely news or economic data, you'll find that the market will continue to push down and go past its threshold of that range. So we'll see what happens now. Either or of this will happen, and we'll see it happen. But it's good to know. Just remember that coming towards the end of the 10 minutes, the last 10 minutes of the hourly candle, you either may have a strong pushback to the upside, which is not something you should worry about, because when the new hourly candle opens, you should have the continuation down. But if we don't, then we should just continue that range to the downside. We'll see. Obviously, it's either 50-50, but just something to look out for your own trading. But we'll let it run. Alright, so as I'm watching this now, I can see that we're more likely to leave that wick behind on that hourly candle and see this market push back to the upside. Now the thing is, the previous lower high is in and around these levels here. The trend of the market is still to the downside, so I'm not too concerned. But in a scenario like this, what I would like to happen is I'd like to see this candle close strong bearish. If this candle closes strong bearish, then that will give me an opportunity to bring my trailing stop above this structure. So that will represent a true trend, which is a strong push phase, exhaustion, push phase, exhaustion. And that will give me some confidence that we should see this market hold below this level and then continue down. If we start breaking above this structure, then, you know, I have no choice but to keep my stop loss in and above these levels here. And just accept the break-even trade if it comes back on me. But again, I can't control the markets, so whatever the markets wants to do, it will do, and I'll just have to accept it for what it is. For now, it has been a very good trade. We had a very strong push to the downside. Just a shame that we're coming towards the end of the hourly candle now, and we're going to have this pullback and this wick being created. The new hourly candle could open with a continued push to the downside, which is very likely, but it's just whether I'm able to survive this before price gets back up to some of these levels. In theory, what I'll be doing now is I'll just be popping my stop loss above this level here, just to make sure that if price does come back on me, that the trend is not changing and that I'm out of this position, and we'll be looking for a new position. So this is where we'll trail our stop loss, and while you continue to watch this, I'll manage this on my side. So guys, back with an update. I have actually been stopped out of this trade on MT4, which is a bit of a shame, but it is what it is. It's part of trading. So that's it for that video. Hope you enjoyed it. Just my thought process behind a live open trade. You know, as I said, we had this strong rally to the upside for London Open, and we now just let the market change its direction based on the structural change, the different formations that form, which are the lower highs and lower lows. And we went in for this trade. We did do pretty well, almost got to take profit. I think we missed this by a pip or two. Yeah, less than a pip, to be honest with you, but it is what it is. And that's the trade for the day. Finish up with GJ, which is not too shabby, so we'll be grateful for that trade. But in terms of this trade, yes, it's a no-go. Anyway, as I always say, guys, if you like this video, please smash that like button, subscribe if you haven't, and until next time, take care.